We've got Deven Choksey joining in from DRChoksey Finserv. Deven, good morning. Thanks so much for being here. Let's start right there, right? It's a very hot space, the whole renewable energy space. We just had that COP21 international global deal as well earlier in the week. What's your sense? I don't know, I mean, whether your teams had coverage on the IPO at all, or maybe you'll wait for it to list and then make up your mind. But the thing is, it's PSU, so we don't know if it's going to be slow moving, whether it'll have aggression or not, though it's in the right space.
Yeah, certainly. Good morning. Yes, we did cover this particular IPO, and we believe that I think it is largely the IPO for the investors who are holding the investments for at least, I think, 5 years and above. Largely because of the fact that I think the current capacity that they have, sub 4 gigawatt, I think they are basically expanding this particular capacity in next 8 years by about 15 times. So certainly, I think this is going to be a game where probably you are going to see the larger part of the revenue and the profits increasing year over year on a systematic basis over the next 6 to 8 years. So from that perspective, investment looks absolutely favorable and to be considered in the portfolio. However, most of the retail investors or the people who are basically flipping the IPOs, they may not be very excited about this particular story, largely because of the fact that I think the eventual growth is coming up over a period of time, being an infrastructure company. And that's why probably I think many of these short-term minded investors, I think, will not probably be interested. But yes, it is a good opportunity for the long-term orientation, and I think invest in the portfolio from that perspective.
You know, Deven, it's also the age of instant gratification, right? You want to make 50% money on day one of listing. So I think this is not for those category of investors. This is for the patient ones who can really study these businesses in detail, folks.
Yes.
Talking about instant gratification, today I think the Times of India is carrying a story. And I think this is for those who are watching, especially those who are not that tech savvy, etc. An elderly gentleman in the south of Bombay has lost 11 crore rupees in an online stock kind of fraud.
Oh gosh.
So I think it needs to be highlighted again and again. We will do it here on CNBC-TV18 with, of course, markets exploding and communication channels exploding, etc. Exactly that. All of these schemes, of course, tap into that same thing, which is, get rich quick schemes, make quickly money, double your money, and those kind of things. And we are hearing so many, 11 crores. An elderly gentleman here in Mumbai, it's the second largest fraud which has happened. We'll need to, I think, constantly be on the guard, especially with regards to some of this stuff out there. Nigel.
Well, indeed. And if anything is sounding too easy to be through and too, good to be through, please be very, very careful. Don't fall into those traps. We try to do our best in terms of, alerting you to be careful and, please be doubly careful about this. Well, Deven, good morning and good to see you in. We had Siemens that came out with a set of numbers. On the profitability aspect, actually, it was better than what the street was working with. Your view on Siemens?
Yeah, Nigel, I think absolutely. In each of the 4 verticals, I think the company has basically shown the higher amount of growth in the margins, the profit margins. So that is definitely, I think, sounding positive. Maybe it is largely to do with the corrective strategy that they have done in form of, I think, the product rationalizations and premiumization. And at the same time, I think the taking the benefit of the higher amount of order inflow at a premium prices. So definitely, I think this has worked well. Maybe if we exclude one of kind of other income which they have earned out of the sale of property, still, I think the operating side, the margins remain absolutely very convincing from mobility segment, from digital segment, from utility segment and infrastructure segment. Each of these segments, I think, have generated reasonably high amount of margin. So that particular thing gives you confidence that the capital goods manufacturer companies are likely to have relatively stronger period. Even the order inflow that one has seen from the published numbers, I think it suggests that at least the visibility of next 2 to 3 years is definitely seen as far as the growth is concerned. So certainly, any correction in the stock price, it becomes a buy opportunity to buy into the likes of Siemens, CPB, among others.
Maybe Deven, I don't know if you have a view on Zaggle. Otherwise, I wanted to ask you about this entire defense space, because yesterday Nimesh was highlighting the JP Morgan initiation note. Stocks have fallen quite a bit. I think there were three names from JP Morgan: HAL, BEL, and one more. So your thoughts there?
Yeah, Prashant, I think defense remains, I think, absolutely very convincing story. And fortunately, in the current corrections in the stock prices, some of the companies have also given the opportunity at lower levels. So yes, I think given the kind of visibility of next 3 to 5 years in form of the contracts that they have already signed in for execution, and largely to do with the government spending program, I think that's where probably we are seeing the higher amount of activity continuing for most of these companies which you mentioned. So I guess I think the selection, the choice will be BL, BEML also at the same time, and HL of course. I think the prices have corrected. So certainly I think they will mean buying opportunity. If further fall comes in the stock price, I think it will be buying opportunity given the kind of strength of next 3 to 5 years of visibility in the business.
All right. We'll take a quick break here. Thanks very much, Deven, for those views.